Tina, let's talk about investments that seniors should and should not own. What about blue chip dividend stocks?
They are a good option. They provide good yields right now, and they are volatile because they are stocks, so that needs to be taken into account. But for seniors who need yield, they definitely should be included in a portfolio.
And much better yields than government bonds as well.
Much better yields.
What do you think about sector funds, emerging markets, precious metals, technology?
They may become very attractive at certain points in time. They are extremely volatile, and because of that they will do really well in good market conditions for those sectors, and they tumble very hard in bad market conditions.
So how appropriate is that for a senior's portfolio?
Not very appropriate. I would try to minimize them in a portfolio, or try to have a diversified mix that would include those sectors. But again, if you want to minimize volatility, you do not want to be in those sectors.
What about principal protected notes? Those are essentially GICs with guarantees where you get a little bit of stock market exposure and you won't lose money at the end. Do you like those for seniors?
You have to be really careful with principal protected notes because there are a lot of conditions in terms of the return that you will get, and a lot of times it's very difficult for seniors to understand, for any investor to understand. And for me, I think it's very important for investors to know what they're getting into. So if it's plain vanilla, maybe, but the same results can be achieved by buying a strip bond and putting the discount, investing it in stocks and dividend-paying securities.
All right, thanks, Tina.
You're welcome.